Yo, what's up, guys? Okay, so a lot of people have been asking all about this. What is the BNB model? What is the secret strategy? What is the strategy that's gonna give me the most amount of gain? I'm gonna reveal it to you right now. Just know while you watch this video, there's gonna be a lot beneficial stuff in this video that you're gonna be learning and that you're gonna be understanding, and it just overall this model is called the BMB model, which stands for bread and butter. It's probably the best strategy you're going to be applying into your day-to-day life in trading, and this is going to make you financially free. This is going to make you leave your 9 to 5 job. So before we go ahead and get into this bread and butter model, I want to invite you to my Discord server. It's going to be down below into the description. So if you do want to join a community that resolves all your trading needs, as well as if you have questions, as well as learning new things and looking at other people's profits and goals, such as, go ahead and join that Discord community. So with that being said, let's go ahead and jump right in here, guys. So BNB model, this is the model that you're going to need, and that is the only model that you're going to need. So let's go ahead and jump right in here. So what we're going to do, we're going to go ahead and basically this strategy aligns through determining a bias first. I'm going to show you exactly how to go through that. So really quick, as you can see, it's currently May 4th, 3 o'clock p.m. I'm going to go ahead and let's go on the 1 hour time frame. Okay, we're going to start there. I always like to start off with the 1 hour, okay, just to identify stuff. So basically with this strategy, with the BNB strategy, okay, what we're looking for, good old bread and butter. What we're going to do, we're going to go ahead and identify two things, all right? And that is either liquidity, so liquidity, and as well as inefficiencies. As you guys know, if you guys have been following my channel for a little bit, so those two things determine how the market moves. So the market moves to highs and lows, which is called liquidity, as well as price moves to high liquidity areas. So we're going to identify two things. The first thing is liquidity. Second thing is inefficiencies. What are inefficiencies? Well, inefficiencies are simply fair value gaps, order blocks, stuff like that. I usually 90% of the time I mark out fair value gaps as well as liquidity. We're going to be marking out those two things. And as you guys know, those two things, if you guys have been following my channel for a little bit and, learning some stuff on my channel, we know there's two ways the market moves. What are the two ways the market moves? Well, the two ways market moves, so basically it's our low resistance liquidity, okay? So this is our low resistance areas. So price is guaranteed to make newer highs and lows, right? Take out those old highs and lows, liquidity, okay? The second way markets move is actually by inefficiencies, okay, which is actually high resistance. Liquidity, inefficiencies, high resistance. So basically fair value gaps are high resistant areas. So if you look right here, we have this fair value gap here. You see how high resistance this is? It comes in this area, goes up and down into this area, eventually hits this high, low resistance. Okay, so basically inefficiencies are high resistance. Okay, to get to a high, low resistance, you got to go hit some inefficiencies, high resistance. So we're going to go ahead and mark those out. Just say it's the morning of, right before New York session. Okay, New York session is the only session I trade. So no London, no Asian session. I do not trade those. I only trade New York, and you should too, because that's the most volatility. It's easy. It's no brainer. So as we know, there's two ways the markets move. Okay, what we're gonna look for, all right, is liquidity first. Where is our liquidity on the 1 hour time frame? Well, we have lows. So price right now is closer to these lows. Let's go ahead and mark these lows out because price is simply just closer to these lows. Two relative equal lows here, high liquidity here, low resistance. Boom. It has to probably take this out as well. It already has taken this out. You see how it wicked into it right there? Tapped into it perfectly. Perfectly tapped into that. You see that? That is a sign. Perfect. So we got those two marked out. We're going to mark out this high and this high as a good liquidity area, as well as the trading sessions have a good liquidity. If we go ahead and highlight this, it shows our sessions. Okay, trading sessions. we have our previous London low here that got swept earlier during 5 o'clock a.m. on this candle. All right. We also have Tokyo low swept out. New York previous day, right? New York got swept out. So this all is low resistance liquidity. This low, this low, this low, this low. This right here is a low resistance area. That's just why price is retracing into this area. So once we highlight that, what else are we looking for? What can price trace to now? High resistance liquidity, or not liquidity, high resistance inefficiencies. Okay, so if we look here, we have this higher time frame fair value gap that we're in right here. Okay, this is high resistance. So we're gonna have to get a little bounce, some resistance in this area. We're not gonna instantly go through this because remember, as you guys know, if you guys have been watching my channel, whenever there's a higher time frame PD array, such as a inefficiency like a fair value gap like this on the 1 hour, it's more likely to get respected rather than a lower time frame inefficiency. Okay, so if we go ahead and go in the 1 minute, let's see how we react. So once we waited for that price to come down in this PD array on the higher time frame, this 1 hour fair value gap, we're going to expect a bounce, so we're going to be bullish. Okay, so what do we look for now after we're inside of this? Well, we're looking for an inversion fair value gap. What is an inversion fair value gap? Well, look at this one here. Just the same thing as a fair value gap, but we want to see it get inversed. So we want to see price reverse this. Okay, so price does indeed reverse it. Boom. We want to see a nice close above, right? And right on the retest, okay, is where we want to enter. Retest of this inversion fair value gap. Because if you're entered right here, we would have more drawdown here, right? If we're targeting this high. If we entered down here, we would get more of an entry, a better entry, right? I always like to wait for retests too as well, because I could determine how price is respecting, if it's respecting the fair value gap of the IFVG, okay, more, or if it's not, right? So I wait for that retest. There's my entry. We have our stops here. All right. And then what else do we get along the way? Not only right before you enter here. Okay, there's one other thing I want to include is what I do all the time is wait for a CISD or market structure shift. Okay. So if you have both of these, A plus setup, bread and butter, right? So we have our CISD here. This candle right here is our CISD. So change in state of delivery. Okay. Our market structure shift would be at this high here. So realistically, what we want to see after a retest of this gap here, what we want to see is a market structure shift. Okay. Right when we see that shift in market structure, I might sometimes add into my position. So for example, right on the retest, so let me go and rewind this. Stops here. We got the CISD. Our trade is valid. We put our entry either above this inversion slightly or inside it. You can put it here, but it's not much of a chance you're gonna higher chance of you getting filled. I always like to keep it barely above the inversion, just like this. Okay, we're gonna go ahead and target this high first, or you could go ahead and target high resistance areas. Okay, what is a high resistant area? Well, our high resistant area is what? PD arrays, right? Fair value gaps. Look at, there's a fair value gap right here. Price needs to retest this area. So let's go ahead and target this. All right, for a 1-on-1. Okay, stops be at this low. We could put them here, but again, better risk reward. But if it comes inside of here, it could stop you out. Could probably wick out if it's respecting this area. So I like to keep it here for safety reasons. Comes down, taps in. We're buying. 2 contracts. Boom. Now we wait for this shift in market structure. If we don't get that shift in market structure, we're likely to get stopped out here. Okay, because we want to know we're in a buyer's program. Price comes down into our fair value gap. It's okay. A little bit of drawdown is healthy. So far, we are respecting our gap here. Respects this area. And look at, boom. It goes inside of this high resistant area. What does price do in that high resistant area? Well, look at, goes up, retests this, has a hard time getting out of it, but gets out of it here. Okay, where are we likely to go now? Low resistance. What's low resistance? This high. This is low resistance liquidity. Inside the liquidity. So you could catch this whole move here. Look at. There it is. That would be your trade. And then after that, all you do is trail your stop loss all up here. Right? So now where are we likely to go? So now we have a lot of inefficiencies here on the 1 minute time frame. So let's go ahead and go on the 2 minute. Do we see anything else? Well, we do have this fair value gap here. That looks like price is respecting this area. Let's see what price does. It respects it. Okay, drops lower, but manages to, looks like, get out of it. Stuck here, consolidation, right? Boom, bounces out of it. All right, so since we're out of that high resistance area, where are we likely to go now? Let's go on the 3 minute. Well, we have another fair value gap. Look at this, another one here. Boom, price comes up, comes down, rallies. And then where are we likely to go now? Well, we have this fair value gap here on the 5 minute. Look at, of course, a high resistant area, right? Look at, price comes down, boom, rallies, right? And then eventually, price looks like it's starting to reverse. So if we go on the 1 minute here, we had this news candle, looks like here. You can tell it's this news candle because it has this, look at this wick, crazy wick here, but then reverses down. This is a data candle. So we have our data high here. If we highlight this, we have a data high right here. We got to the high of the news candle. Okay, took a little bit, but look at, if you're a swing trader, imagine if you just caught that move. You know what I mean? But of course, you're day trading, right? So we're going to catch the high resistance areas here, right? More here, or maybe even if you're scalping, right? We're going to go ahead and hit this high, right? For 1 or 2, quick little 1 or 2. This is high probability here. This setup is high probability. This setup is going to make you money left and right with a 90% win rate. When do you see a 90% win rate? You don't. With other strategies, you don't. But when you see this loud and clear, this is going to show you exactly what price is likely to do. Okay, we caught this nice reversal just by using this simple strategy, by using a higher time frame Peter raise, right? With a market structure shift, right? Ideally, if I was in this trade, look at, watch this. So if we're inside this trade, okay, I would have waited for this market structure shift. Once we got it right here, look at, I'm gonna buy more. Okay, I bought more. Just because we saw this, I know we're in a buyer's program. Just because we got the shift. Price rallies. So relatively pretty simple if you ask me. Pretty easy trade actually if you did take this too today. Wow, I wish I was on. But again, we have high impact news. This works on high impact news days. This works on other days. I just didn't trade today just because how volatile the markets have been. So, but volatility, this is what thrives. Volatility thrives with a strategy. So again, really quick, I'll just run this down for you before we go. And I gotta say, if you do like this, hit the like button, hit that subscribe button, because this is so beneficial. Like, this is gonna help you out so much. And I'm giving you this for free. Like, what more can you ask for? You know what I mean? So, bread and butter, guys. Again, inversion. Boom. Retest. Boom. Market structure shift. I'm adding more there. Now we know we're in a buyer's program. I don't care about this low being made because we're testing our fair value gap as well as we're inside this normal fair value gap right here. I didn't mark out, but we're inside the IFVG. Boom, we're on a buyer's program. Hits us high. Where else are we likely to go? Boom, here, high. I'm out. Okay, pretty simple because, again, and all we did was go on the 1 hour time frame. Okay, we saw this low, these lows getting swept here, this low getting swept here. Got a sweep inside of this higher time for PD array. Look at bullish. Immediately I'm bullish. Right when we enter this, we're looking at a change in state of delivery, market structure shift, as well as that inversion. Retest, hit, boom, profit. Pretty simple, if you don't mind me asking. And literally, this is going to help you out so much. If you guys enjoyed this, hit the like button, hit that subscribe button, join the Discord community, because this is so beneficial, guys. Hope you guys enjoy this. Take care. Peace. Trade on.